Thanks are up. Inflation is fine. So now the market is going into a shift of control, a shift of sentiment. Seems like right now, we've kind of got a little bit of an all clear message this morning. That's good. I think that helps set up a lot of it more predictable and actually potentially high leverage trade concepts. I'm excited about the way that things played out this morning. I think it's really going to set up better trading opportunities here. A panicking, choppy market can be tough to trade. The control is going back to the bull, a more predictable, standard, investment flow for now at least. So all in all, there's no need to fly away from the market. There's no flight response this morning so far. We'll see how the stuff plays out today. If we get active, aggressive fading of this move, then my initial read on it is completely going to be negated. I want to see how those first couple hours go. We're retesting some of the resistance levels for the SPY, for the SP 500. But we're seeing some really good signs overall for a broad market rally here and a resumption of a bullish trending potential market. So I think this is a good one for setting up an increased probability of success for the bull. And that's where this is really going to come down to. The probability of success now starts to go strongly, firmly into the bull's hands. Return on capital, we should be seeing the VIX fall. So as the VIX falls, that'll allow options to create a bigger return on capital than from the lower point, higher from a coin flip up or down to higher odds to the upside. Maybe the magnitude of the rally potential is decreased since we've appreciated somewhat today already. But that doesn't mean that we can't necessarily leverage that because of the drop in implied volatility. We do still have now a risk set up and higher probability of success. So I think this increases the expected value of the trades and creates a more normal trading environment, at least again for now. We'll look at like kind of the number of days and stuff on this confirmed trend change. Obviously, that's not really the case yet since we have a liquidation just Monday morning that bounced back, but it was still a little bit questionable. Yesterday, we had a little bit of mixed signals. Today, it looks like all the VIX elevated on Monday didn't get too extreme, but maybe did all it needed to do to stretch bulls, get those ones out, and now resume a repurchasing plan for those that had cash on the sidelines or hedges on that now can buy against the market with that, or refocus with more stock positioned and hedged with a lower VIX. So all in all, I think this is a good thing for the market, gets a lot more confidence in for us. Earnings, of course, going to continue to be key. We don't really have anything too interesting to this afternoon. Tomorrow morning, we've got a handful though. We've got Taiwan Semiconductors, United Healthcare, Bank of America, and Morgan Stanley are the four that I'm really focusing in on after we had mostly just banks this morning. So we've got a couple more banks tomorrow, but a couple that are getting into other sectors. And I think Taiwan Semiconductors is going to be a very important one for the tech market as it's one of the first good-sized tech companies coming in, semiconductor name. If that comes in bullish, that could really help set up a lot more confidence in the market. Taiwan, so Far East, we've got semiconductors. We got a lot of elements to that company that I think could set a nice tone for the market if it comes in bullish as well. As always, stay flexible. I continue to look for opportunities to invest, but also want to make sure I have cash in case I'm wrong or the market decides that this wasn't enough. Early signs say that this market is saying it should be enough. We'll look at the 10-year yield as always, falling today, getting into a more normal behavior. I think all in all, this is just couldn't have asked necessarily for more from the bull side, seeing somewhat of a rally and looking for continuation potentially today. And if we get that continuation, that's going to set us up even better. So with that in mind, first things first, we've got the 10-year yield back down to 4.66%. We've got a cushion now. we're not testing highs, looking at that possibility of going to 5%. We've created a big cushion here. We got down to these levels really close to the previous high from December 26th, right before the end of the year. We're trading it effectively 2025, real close to the 2025 breakout point here on January 7th. I think that this is going to kind of pull back a little bit further over time, down to the 4.55% range, get down back towards that November 18th high. We should start seeing some support for the 10-year yield as we fall. But this just gives a lot more confidence to the market that we're trading in a range that we know how to handle a little bit more, how to manage, and we're not pushing 5%, at least for now. We're seeing some risk on, as I think many of you are aware. Big barometer for it's Bitcoin, 99. So tried to fail on Monday, and here we are on Wednesday looking at a potential for that breakout, resume the rally in Bitcoin, full risk on, go for the market, go for tech kind of signal. Obviously, much of this news this morning was concentrated in financials with the earnings that we've got, but Bitcoin being bullish can add an extra layer of tech involvement, semiconductor involvement, artificial intelligence involvement, more of those momentum names, and really help spark a market rally. So I think this is a very exciting sign that we're seeing out of Bitcoin. This is, just basically what I think the bull was certainly hoping for is what we're getting. And if this market just continues to grind out higher prices throughout the day, that's going to be good. Just a note here, Bitcoin did have a MACD crossover, started yesterday. So we had this sideways, maybe drifting a little bit lower indication from the MACD after a nice rally, had the crossover at the end of November. That was just kind of illustrating to us that sideways behavior. That crossover could be just the start of something much more, we'll call it magical in Bitcoin and cryptocurrency and risk behavior. Investment behavior into riskier assets. So we'll pull up the VIX since we're still pre-market. I'll stay on bar chart for just a moment here. VIX down to 17. So another great sign for this market overall. This is what I was talking about being able to get a little bit more leverage. I do think this is going to continue to fall. Even though we've got earnings, we've got a Fed decision, we've got a lot of stuff in the next 30 days that can help create a potential for some concern, hedging behavior, et cetera, in this market. But the VIX, I think, does have a little bit more downside here. So I got to keep that in mind as I'm looking at elements, but we're not at a high point in the 20s, 22, 24, up towards 28. That is indicative of a true fear-based market, looking for hedges, looking for exits. We are getting more into normalcy. And I think we'll start to see some buy writing behavior coming into the day-to-day, people selling calls against the previous high, expecting that to provide some resistance if we can get to that range. Now, if we break out, that can actually create some extra momentum to the upside if we get above that buy right level. But for now, I think that's important for the market to get into that point of trying to finance hedges with selling calls instead of just buying put spreads. So if the market had been, as it kind of appeared, going through a process of buying put spreads, maybe dollar SPX. No, is it carat? There we go. Nope, it is dollar. Sorry, we'll get the SQDEX on here again. But we see that has been on the weaker side. So even though the VIX had been rising, SQDEX wasn't coming up with it. Meant people weren't buying out of the money puts; they were defining risk with put spreads in general in that VIX rally. So if they've now invested by buying put spreads, we could see a little bit of a SQDEX switch here where people start to buy up the cheap further out of the money option and leave a little bit more open-ended hedge to their portfolio. Or we may see people rolling up their hedge to a higher strike while also, I expect, selling out of the money calls. What that would mean is people buying either put spreads, outright puts, or even put butterflies to roll up the strikes while selling a call. Net impact would be that lower VIX that we're seeing, and a return profile that does best in a normal negatively skewed market where we drift higher to the kind of normal return behavior over the day-to-day, but starts to change the way that people have to trade if we start getting more aggressive rallies. So that's where we're at. We're seeing a broad market bull behavior. I'm going to give this to 30 seconds to let the chart update here, but right now, as it stands, we're trading 590, up 1.4% in the S&P. Normal expectation is about a 1% move, so this is already a 1.5 standard deviation move. Not a big surprise given that we had fundamental inputs that caused that spike. Now, over the next 30 days, we're going to see this number start to drop further, probably back down towards 0.75% expected move higher and or expected move on a day-to-day basis instead of a full percent. It doesn't sound like a ton, but it is crucial for this market to start to see that more normal behavior. And there you go. We got the open. We're hitting right here. There's a bit of a consolidation area, but as always, looking at the way the downward trend has been going, lower highs. We're testing that lower high already. We may see it today. We may press against that downward sloping resistance line today. We may need another day or two of market digestion, but broadly speaking, bulls are getting back into it. So I really like the way that this market is setting up for the bull. As I said, I think this is exactly what the market needed, even for the bear. Now, you could say if you're bearish and looking for a bear flag, this is a really good potential entry point. If you're bullish, this is better, higher probability for the bull. But the bear still has some potential here. We didn't break out of this downward trending resistance line yet. If that holds and we reject it, you set up the bear flag. We look for prices down to 575. That's my next support. It was the low of January. It was the high of September. That would be my first support level that I would really key in on for the bear. For the bull, it's about getting above this 593, 594 level, and then setting up that move towards 610. When we we'll do tech first because financials are more dig into the minutia here. Tech a little bit weaker, relatively speaking. Financials were the earnings this morning, so no surprises there. But up 1.6%. We should be seeing about 30% higher return there relative to the SPY move. So when we see a 1.5% move in SPY, we should be seeing 2% in tech. Slight underperformance, no major surprise there, but I think that may shift. Semiconductors, middle of the range. Nothing really to write home about yet. So all in all, tech is giving a bit of a mixed bag signal, but that's okay because that wasn't the driver of this rally today. It was all about inflation and financial earnings. So we go to small caps, 2.5% today. The leadership right there from small caps coming from tech, pressing against the new year highs. So small caps really getting close here, crossed a lot of moving averages. We're above the 10-day, above the 20-day, now above the 100-day. Really good, strong signals there. I want to stay above the 100-day moving average today to continue that bullish trend. The MACD crossover is there today. These are all great signs. And when we go to financials, of course, they're the big winner today, pushing through the highs of 2025, playing right here at the highs of December 26th, telling us that that initial reaction on November 6th, we're right in line with it. So we're back. We filled down the gap up just about in XLF on a broad basis here on the move on Monday. A couple days later, here we are right back where we were on November 6th. It is no net move, but the bull is back in control. So that theory, that thesis of financial market, financial company strength, back in play. So I really like seeing that. Oh, I'm sorry about the audio. Let me know if it continues. If not, then I can try to adjust a microphone or something like that. But as long as it comes back, we should be good. But if that does not happen and it continues to be choppy, please let me know, Fred. Okay, thank you. got a little closer to the microphone to see if that would help. Let's dig into, well, first I'm going to just show the regional banks. Regional banks, even better. So when we're going for financial company momentum, regional banks are even better than financials, even though they weren't the ones that had the big earnings yet. So there is an exuberance for financial companies again that is clearly there. I really like the way that this is performing for financials, and I think it's going to continue as long as we don't get any major negative surprises. Tomorrow morning we got Bank of America, Morgan Stanley. We do have U.S. Bank, a couple of others that it just PNC, M&T, First Horizon. These are names that I don't see anything really major for trading for the earnings announcement, but they should be noted that there are a couple of other smaller banks on a relative basis. And they need to be watched as well as potential tailwinds. If they all continue to be bullish the way that they were this morning, I think the market's going to get that much more of a sigh of relief and just keep chugging along. So I think that's a really good setup for that. When we go through the earnings moves, Citigroup, new high. For now, the iron condor that Vlad was looking at, the 77.5, 79 call spread versus what was the low side? 69, 67.5. Getting hit a little bit right now. The premium increase on the call spread side is enough to offset that potential gain, but we're staying below 77.5 for now. Just needs to be monitored and managed very carefully. The ones that I was looking at is more likely to stay within the range. Wow, JP Morgan unchanged now. Initial reaction was quite bullish. JP Morgan did nothing. At the end of the day, we pressed against the low point of that and then faded. This is what I need to monitor closely, but we did have a good rally for 2 days heading into earnings. So maybe no particular surprise that we tested the highs, initial rejection. We'll see if that bounces back, but that iron condor definitely working very well right now. As long as we don't push back through 250 aggressively, I think this is going to really look for a pin around 250. Biggest open interest there. Got a couple of days to play it out, but leaning on the light bull side overall, but overall staying within that range looks really good. Goldman pop now, so yeah, Goldman got the extra boost from that inflation report this morning. So we're now looking at a 2 standard deviation move in Goldman, a very unfortunate push through. Looking to stay under 590 made a lot. It could seem to make a lot of sense in general, but now we're pushing up towards these previous highs. We'll see how this behaves. 600 may be our pin here. There's biggest open interest there. Got to keep an eye on this one, manage, and understand that Goldman may just continue to fall through. So for Goldman, a little bit concerning there. Last earnings we had which was bullish. We did fade by the end of the day. So for now, I think it's about monitoring and managing and understanding that it is trading a bit more bullishly than I think obviously expected with a 5% move, but that doesn't mean it's over yet. We'll see. What were the other ones that we were looking at this morning? We looked at Citigroup, we looked at JP Morgan, and there was Wells Fargo, of course. Ads. Wells Fargo and kind of a light look at BLK. So Wells Fargo, similar to JP Morgan, popped and faded here. So staying pretty much where we are looking for, but 4% is on the high side, kind of right in line. I think we were looking at 75 for that yesterday morning as the biggest open interest there. Kind of playing around with that 75 line. The double butterfly for Wells Fargo still seems okay. The iron condor for JP Morgan looks good. Iron condor for Goldman and Citigroup are questionable right now. So a little bit of a mixed bag because of that magnitude of the move with the light inflation report. But overall, I think setting up maybe more, not many more better trades as a result. So even if the mixed bag means a break even, depending upon the trades chosen, overall, I think we're looking. I mean, you can see here on my watch list, everything is green except for the dollar and the VIX. So we've got a very bull market reaction today. DXY, I should just bring up here. Boom, boom, boom. Let's load. There we go. So DXY pulled back to the 20-day moving average. Should be finding some support here. If it continues to weaken, that's going to set up a lot of potential bullishness in the commodity space again as well. Dollar yen, as you can see, had a bigger move down to the downside today, down a full percent. This is setting up for bullish precious metals in general, in my opinion. We broke through some support levels here, testing the lows of December 31st. Kind of looks like we're at least going to look to test down to 154.5. And that sets up gold bullishness that is not being priced into the market right now. Maybe because we're already testing the highs. So that bearishness that I was initially looking for with dollar yen holding up seems to be getting a little bit washed out here. Those buyers of gold miners and silver yesterday getting paid a little bit today. Let's see how that plays out. But as long as the dollar remains weak, I do think that silver retesting 29 starts to make some sense, especially if FXI can maintain this bullish behavior that it started with yesterday. So if FXI holds up today, up 1%, silver definitely one for my watch list for maybe an afternoon add. If this gets faded when China ends up lower on the day, there's not much for me there then after all. But for now, I do still think that there is some bullish potential in precious metals for the near term. We got through that report, the inflation report, and can allow for higher precious metals prices, even if that's not intuitively. When we're seeing lower inflation, people maybe are inclined to say there's less need for that inflationary hedge of precious metals. But when the dollar is weakening, go right back into it. So when the dollar is strengthening and inflation is a concern, we expect the Fed to behave accordingly. When the Fed doesn't have to worry as much about inflation, then actually these inflationary elements can sometimes rally as a result. So it's kind of counterintuitive. But with a weakening dollar, it sets up a bullish market for precious metals. So I think that's kind of an interesting little twist in the way that it works. It can often work. So Fed Watch, I want to pull this up for the January 29th meeting. What just changed? So 95% odds of staying the same. And now this morning, 97%. So no real shift in that. I think the question is going to be the commentary. We're not changing the behavior of the Fed, we're changing the verbiage. So expecting some change in the verbiage in 2 weeks. That's going to become hyper-focused, I think, in about a week and a half as we get closer and closer to the Fed decision. But we've got the inflation data now that might appease some of the concerns that they were having, ease some of their concerns, and allow for them to say, we can say, I don't want to call it crisis averted because it wasn't a crisis, at least not yet, but it was clearly a concern point that if they saw inflation numbers coming in hot yesterday and today, it could set up a very concerning verbiage from the Fed saying that we've got inflation. And if on top of inflation, we were seeing weak earnings, we would be really very concerned. We have a potential for a weak economy and high inflation, and how do we respond to that? A much easier market to handle is muted inflation with strong economy, and that's what we got for signals over the last 24 to 26 hours. So let's run through. First, we'll do the AI signals for today. We have Cardinal Health, tone highs, not really doing much yet today. As long as we hold up here and stay really above yesterday's high after the big move, this does look like it will want to break out. but overall kind of a non-event for the day. Discover Financial being in the financials is breaking out. Probably too much of a move today to chase into with earnings next week. So I don't want to get aggressive with that. But HPE could be an interesting one. We don't have earnings until March. We've pushed above we'll call it the post-earnings high. So we had the earnings rally, then immediate fade. The highs we've seen since that 2-day window are right here at 23. 2306 technically. We pushed slightly above that, now testing against it. This is an inflection point potential trade. As long as we don't fade that move today, this looks like it's going to start pushing towards 25. And just using a simple February, 23 call to ride that new forming bull trend looks attractive. If we go to 25, which is kind of my scenario, a decently round number and pushing to a new high, that's a double. So I may look to add HPE into this afternoon as long as we hang up here. If we fade and we go down 2% today, finish around 22, it's a non-trade. If we stay around 23, the February 23 calls look pretty good to me. All right. I'm going to touch on earnings for tomorrow morning. I'm going to review them again this afternoon at the closing bell. But for those that cannot attend the closing bell, we'll do them now too. So we've got 4 that are in focus for me. Taiwan Semiconductors is the first one, trading right here at 204. Traditionally moves right about in line with the implied volatility here. So we're expecting about 5%, $10. That would be a test of 195, which is the low from January 2nd. If I put in our trend line of how we've been going since making the low on November 27th, we're basically pressing against it. If I want to be a little bit more conservative, it's really today's low on there. The high point is a little less defined. We had attempted a breakout on January 6th. If I sort of ignore that, there's clearly some resistance here. Around 208, 209. I expect earnings to push us out of that range. If we go $10, it's 215. $10 to the downside is 195, as I mentioned. Realistically, I wouldn't be surprised to see 190 and 220. That's the bigger parts of the range. We've seen moves in line with 7.5%. We've been higher than that for January of 18, October of 2024. January 24 and October 2024, excuse me. We have had very minimal moves, but it seems like we either get the move or we don't. For earnings tomorrow, we've got big open interest at 210 and up to 220. On the downside, we've got big open interest at 190. It's every kind of $10. 200, 190, 180. 195 is close on that number. 215 is a significantly lower number. I'm looking honestly for that 220 or that 190, and this would be the double fly setup because we're looking for more than a standard deviation. Could widen it out in case we just get in line. If we go to 215 or 195, I want to start making money in that case, in that scenario, in the base case. So I'm thinking 215, 220, 225 on the call fly. 330, 75. It's very cheap. About a quarter on the call fly, about 40 cents on the put fly. So about 70 cents for a double put fly that maxes out at $5. 7-to-1 kind of payoff if held all the way through to expiration on Friday and actually pinning. But I think this one is actually setting up with some really interesting potential return for the magnitude of move on just a 1.5 standard deviation move for earnings. So I actually really like TSM overall. Carmen, I see your message. I'll definitely touch on Tesla in a couple of moments here, okay? We'll do UNH first, wrap up the earnings ones. So UNH, obviously a disastrous scenario with the assassination. It's recovered really nicely to the 200-day moving average. I got to be honest, I don't expect this to be a minimal type move. There's a lot of new information that's going to be coming to market here with their fundamentals, with their earnings picture. It may all end up being for kind of a nothing move, but I'm thinking 5% is a starting point, but more likely we could see even bigger because there's going to be a lot of potential for new information in this market that we're going to have to digest as we go through this process. So if we're going to go for even 5%, it's $27, $5.65, a little bit of resistance there. Looks like 580 is a better number. 500 would be a really big number. Round number, the lows after the minor recovery here. So 500 and 580 look a lot more interesting to me than anything, and that's about 8%. So again, if I'm looking for a double fly, I'm thinking like 507.5, 500, 492.5. Good open interest there. The 580 line, I want to keep it wide. And we don't have the $2.50 strikes here, so I think maybe widen it out. Going with 510, 500, 490, and 570, 580, 590. The big open interest is at 600. That is a complete outlier. I don't want to make a trade for that with a double butterfly. I'm looking for $40. So 510, 500, 490, and 570, 590, 600 pair off the double fly there for UNH. For Bank of America, we're pushing the highs because of the earnings this morning and because of the inflation data this morning. If they come out weak, I think that's where we have a potential for the bigger move. The bull move has already been priced in to a certain extent, 3% already today. Before the earnings, we normally see about 2%, 2 to 3%. So we've kind of done the move. If we were going to have the earnings this morning and they were bullish, maybe we would have seen 5 to 6%, but staying under 3%, excuse me, seems natural on the bull side. Excuse me. We're in cold season. There we go. But if we get a bearish announcement here, we may see 3 to 4% very easily negate the move from today. That would put us back down towards 45 on the downside and probably a little less on the upside, maybe closer to 48, just retesting the highs. So with that sort of structure, a little bit of a skewed expectation of 48 being some serious resistance and 45 being some serious support. I honestly look at this as a singular trade. We could play out with those $50 strikes, a very tight double butterfly, only 2 days to expiration. It could pay off, but it really kicks in on Friday. So it's a trade that if I put on today, I'll get a little appreciation for tomorrow. I think better trade for me on this is to let the earnings happen and then pick the pin afterwards. If we go to 48 tomorrow morning, I start looking for the pin at 48. If we go to 45, I start looking at the pin at 45. And if we hang right here, the pin might be 47. I'd rather play the pin after earnings and try to pick the stock price after earnings given the move today. So I don't want to do anything today in Bank of America, given that we already preempted the move. Similar kind of analysis for Morgan Stanley. We would normally expect maybe 6%, where we've gotten about half of that. So I think that if on the downside, we could see down to 120 if we're bearish, probably a little bit more muted, maybe 135 if we're bullish. So a little bit of a skewed distribution here, 135, 120. It's not the normal symmetrical double fly kind of trade. I could, again, play for the move with like a 122, 120, 118 put fly paired with a 133, 135, 137 call fly. Because it's slightly skewed, where I'm expecting the smaller move to the upside, I think I'd look at this as like, if I'm only looking for one contract on the call fly, maybe 2 on the put fly, or 2 call flies with 3 put flies. So slightly more on the put fly if I'm getting into multiple contracts. If I'm doing this as a single contract trade, one of each is okay. But as I get to utilizing a little bit more capital on it, 2 call flies, three put flies, or 4 call flies with 6 put flies, something like that would be how I would pair off for a little bit more symmetrical payoff. Because the downside is a cheaper trade and a lower probability trade. I need to get paid a little bit more if we just have that, if we have that downside trade, or I could widen out the put fly a little bit in order to offset the delta impact of being in the call fly only. It's not a huge delta again, though. I mean, the delta of the call fly is a 3 delta. The delta of the 122, 120, 118 put fly is about a 2 delta. So it's just trying to get it to delta neutral, which is why I was saying 2 to 3. 2 call flies versus 3 put flies gets into a straight zero delta. But I think the magnitude of move to the downside looks a little bit more, a little higher potential if Morgan Stanley does disappoint. Because right now, we're expecting good based upon what we saw this morning. That's a little higher probability, but the downside has a little bit higher move potential. All right, that's kind of where we're standing on the financials, though. I mean, I think generally speaking, continuing to watch this JP Morgan, see how we manage, but staying above yesterday's high is a good sign. Staying below today's high is a great sign for the Iron Condor traders. And now it's just managing through expiration. We got 3 trading days till January options expire. It's a big expiration being a serial month, and I like to see the behavior that we're seeing there. And Goldman, really looks like 600 pin is already starting to set up more. We'll get more information on that throughout the trading day today as the volume picks up and the range tightens towards these bigger strikes. Tesla. So Tesla has a big benefit of being, involved with the political policies. So Elon Musk being the Department of Government Efficiency head, he can influence political policy in a way that benefits him and his company. Whether he says it or not, obviously that's going to be part of his motivation. He wants to make sure that policies that go into effect that he pushes for are going to be beneficial to him. That is going to be beneficial to Tesla. So I am at the very least anti-bearish Tesla. If we start to see Tesla fall, I think that there will be some elements of push for some shifts in policy that would benefit electric vehicles, particularly Tesla. Overall, I just think that, having that tight tie to the political regime is good for Elon. And if it's good for Elon, it's good for Tesla. And that's why we saw, since the election, this just massive rally. 360 was a big number that we struggled with initially through November, pushed through. After that, we went to almost 500 before this pullback. It always felt like there was going to be a buying opportunity there. For the short-term trader, it was a difficult level to try to pinpoint. But 375 provided some really nice support here, the lows of the year. So if we stay above 375, I'm pretty confident of the next leg being to the upside towards 465, maybe even up to 500. Downside $40, upside 50 to 85. With probability to the upside. So overall, I think the setup is good for a bullish Tesla thesis. The term structure is set in such a way that we've got, that kind of being priced in for that kind of move. We've got an $85 straddle for March. So if I'm looking for that move to 500 by mid-March, 2 months, I'm not going to necessarily get paid very much for that trade. So I have to be thinking through the earnings to a certain extent and wondering about a February call spread. I don't know that their political influence is going to have a huge impact on the earnings announcement this upcoming month. I I think that we gotta probably, as much as I hate to say it, let the earnings happen. And if we get a bullish earnings, it may not be much of a trade in Tesla after that. If you want to have a thesis of playing bullish through earnings, looking into some February options, or looking at Tesla the week of earnings, week and a half from now, and playing a bull scenario with either a call spread or a call butterfly. But for now, I'm leery about getting too aggressive with a Tesla bull play, knowing that earnings may or may not be bullish for myself. My fundamentals on the Tesla earnings announcement are not going to be better than the street. So I have to just play off of the magnitude of the move and what the option structure is giving me. Traditionally earnings around 12% move. We did have a 22% mover just 3 months ago, but we had 3 straight right at 12%. Before that, we were 10 to 12%, 9 to 12%. So 10% would put us back to 450, 460 range, right around these highs. Sort of as a preliminary target point for their earnings. 460 would be kind of a base case. The bull case might be up to 500 on earnings, and the bear case 375 seems like that would be my target spot to the downside given current setup. In the next week, Tesla may just trade with the tech market as we see more and more tech money flow, which we're still seeing today. Now tech is up 2%, was 1.6 when we started the day, 1.5. That can get that tailwind, and that can be nice leading into earnings. So if you're looking for something for the next week or two pre-earnings, the bull flow looks like it's coming into tech now as we get risk on. But the earnings themselves, we've got 2 impacts that on their day that are going to be impactful. Their earnings are the 29th after market, and the Fed announcement is the 29th after market. So with the Fed at the same time, we have a similar setup to what we had this morning where we had inflation and earnings, and that can double up the move. Or if one's bullish and one's bearish, it just offsets to a no move. If they're both bearish, we could get a magnitude move to the downside. So this one's going to be a little bit tough, I think, for the earnings play. Since we've got 2 big inputs, one for the economy and one for the stock itself. For now, I just don't know that I see anything in the short term that I'd like to do in Tesla, but that may shift over the next week and a half. And Carmen, actually, more often than not, I just buy a call option or buy a put option for earnings. I don't normally buy an outright option. I can give you an example. Right now, I didn't end up shifting yet. I'm still on the WMB January 55 calls. I'm going to look to get out of that today. We're pressing against the resistance here. I'm long these January 55s. They're stock at this point. I got my win. Time to move on. I had mentioned yesterday I was thinking about switching to the February 60s or switching into OKE February 110s. And right now I'm leaning towards the OKE. I'm still leaning towards the OKE or nothing for those 2, that kind of sector. Just looks like OKE has a little bit more move to go before it hits resistance. WMB is right there. If WMB and OKE both stay bullish in line with each other, WMB will break out above 60 before OKE will hit resistance. But after the leadership move of WMB, I'm looking for a profit-taking move on that and then reevaluating for new trades. So, I do outrights, and I also have some, I usually, traditionally for directional moves, I'm either in an outright or I'm in a vertical. I use the butterflies more often than not when we're in a pin right before expiration, so those last 2 to 3 days, or with earnings because I'm trying to pinpoint a potential move like what we're looking for UNH. All right, or TSM. All right, I want to make sure that they haven't had a big shift in the individual name movers for today. So our biggest move is in LQD and IEF. bond focused movement here. LQD has been getting crushed, bounced right back to its consolidation area from 2 weeks ago. IEF right in line with that. XLU. This is interesting for me to see. So utilities may be looking at a potential breakout after having a bad bearish run here since the end of November. Basically sold off into the end of the year, chopped around, bouncing back today. We know that the two biggest hit due to the fires in California were PG&E, which is starting to recover today. EIX got absolutely slammed as well. Those two have been absolutely devastated in terms of the stock performance due to the devastation in California. When I look at utilities, I tend to go first to NEE. It's been the biggest holding of XLU. So if you look at XLU components, biggest is NEE, 15% of XLU. We got Southern, Duke, and a few others a little bit behind it. So, looking through when I see utilities bullish, I tend to start at the biggest holdings of XLU and see where they look on a technical basis. Southern, very similar, pressing against some serious resistance levels here. And if they can get above this like 83.5 level, this target's 88. Again, call vertical when we're looking for something like that, like an 84, 88. Duke has a little bit of work to do before I can press against the highs there. So for me, I'd look more for an in the money call spread, saying we're not going to likely fall below 105. We should find some good support there. It's not hugely leveraged, but a $4 call spread here, $4.10. I could potentially make, 20%. As long as we hold the lows, knowing that there is a dividend that'll push us down $1, unfortunately, in that process. But Duke Energy staying above 105 through February expiration looks okay. If I'm looking for something more explosive, Southern for a call spread, or just trading the whole setup right now with XLU. Constellation has been a big winner here with their acquisition announced on the 10th, and that's setting up a little bit of a bull pennant here after pulling back after the gap, now breaking back out above. Should have some resistance at 310, but I expect light resistance in CEG if XLU is getting bull flow. XLF we already touched on. That's of course a good winner. XHP. Home builders just love this inflation information and the lowering of interest rates. And unfortunately, I think unfortunately or fortunately for home builders, I think they love the fact that the rebuild is going to be happening after the fires. If there's 5,000 homes to build, because 5,000 homes were destroyed, 5,000 structures destroyed, that can be a tailwind for XHP. We don't have a high RSI. We're pressing against the 200-day moving average. When we've seen these trends to the downside, similar to what we saw in many other names from November 29th and utilities, for example, this kind of gives me that thought process of, well, if we just now say that everything that was happening in December was wrong, can we go back up to 122, 123? KB Homes had their earnings and they were bullish and then they got faded. Is KB going to be our leader there? Who knows? Pulte, they've got earnings in a couple of weeks. Maybe I can set something up with bullish earnings scenario there because of KB Homes having a bullish earnings potential. But I'm thinking about home builders now, financials, utilities. It's not 100% always tech all the time. For now, that's that market reallocation and market rotation. Speaking of reallocation and refocus, oil has not been something we've talked about a ton. OIH has just been a disaster. XLE has been a disaster, but now USO is at 6-month highs. XLE has been in a bull trend for about 3 weeks. Probably hit some resistance around 96. But when XLE is doing well, I normally expect ExxonMobil to be performing significantly better than it is right now. So if I want to trade for something that's been lagging as a catch-up trade, ExxonMobil to 118, 117 and a half makes some sense to me. Their earnings normally don't have much of an impact. 1.5% in a stock that really moves 1.5% a day anyway. So it's not a huge earnings type stock. It just moves based upon expected margins as we see oil and gas prices. So if ExxonMobil and oil are really firm, if XLE and oil are very firm, I think 118 for ExxonMobil can make a lot of sense going up into February. I can give a little bit of room by buying a 115, 120 call spread. It seems almost silly to sell a call for 37 cents, but when I'm buying one for 120, it just lowers my cost basis. And 120, it looks like it would struggle to get all the way to 120 or through. And frankly, if I was buying an outright call, I'd probably be looking to exit by 120 anyway. So I don't mind doing a 115, 120 call spread for 80 cents, 85 cents, looking at that potential leverage of 4 to 1 pretty easily. I could from 85 to say $4.50. That's 5x my money. So risking 85 to make 370, call it 365. That's not a bad return window if this bull market continues for energy companies. Occidental, always on my mind because Warren Buffett loves it. Not a lot of resistance above the market right now, other than a minor resistance at 2 days ago's high at 53.5 range, 53.20. Beyond that, I'm looking at 57. Chevron, another good one here, performing much more like XLE, more of a leader here. That could be interesting. When you look at OIH, it's been a dog. Didn't have quite as negative a performance in December, just on a relative basis, but it's been such a dog. And if oil prices continue higher and people let this catch up and start turning focus to it, can we get to 335? Can we get that 15% rally? To be determined, but I kind of think this refocus to energy names also makes some sense. There is certainly a lot of sort of forgotten asset allocations that seem to be coming back around right now. And small caps, if you look back 5 years, in 2020, let me see if I can go back even further. So let's go back to January of 2017. 2017, we drifted lower in OIH. That's maybe not the best scenario here, our best comparison here, but if we look back to 5 years, when Biden came into office, we had oil prices rallying and OIH rallied from 70 up to 250 over the course of about 7 months. Now, I guess it would have been here. This was the election. So from 90 to 250. If we're seeing firm oil prices, OIH is definitely a more leveraged play for those those multi-month moves. And I 350, 360 could be in the cards. It's just another sector for me to reevaluate and consider as a potential bull case right now with oil prices doing what they're doing. So a lot of potential buying opportunities out there. I don't want to have everything being full on buy. Apple still lagging here. I'd like to see Apple bullish for just a general flow to the market, but it's nice to see Apple up so little relative to the tech market. It means that people are looking for value within tech, not just going into big names like Apple, Microsoft. Amazon's a bit better here, but still not getting that mega push that we often see when tech is bullish. People aren't just going for the big names. They're trying to find selective opportunities. They're not going full into semiconductors. They're not going full into NVIDIA. These are names that are just maybe becoming a little bit less of a guaranteed winner for everybody, and they are really looking back at that post-election policy reallocation and refocus fundamental shift. AMD has been a dog. Micron recovered, but it's still a bit of a blasé name. This is where it goes back to where I think the TSM could be a big leading indicator. We did have bullish earnings here in October, but haven't really gone anywhere in 3 months. So if we can repeat that bullishness for TSM, maybe that gets the semiconductors back into focus. But for now, I'd rather focus on the Bitcoin related names. MSTR pressing against resistance here. We're pressing against this lower high level and maybe looking for a move to 4.25. We go to Riot for another Bitcoin related name. It looks pretty solid here after breaking out above this 2025 high as Bitcoin continues to be firm. Look at Marathon. This has been a dog. And if Bitcoin related names all get money flow, this one could have explosive return potential into the mid 20s. So I like those names. I'm intrigued by those names. I'm looking at artificial intelligence, getting the recovery, Palantir, AI. But these are names that need a little bit more oomph before they're ready to go. And so for now, I think that the general thought process is to stick with what is getting the starting point of movement, the financials, the energies, and the utilities. And coming back to tech, once we start to see some tech earnings, as long as the tech earnings don't guide lower and disappoint, then I can get more confidence in tech. So I want to get some of those big earnings behind me in tech before I want to go full bore into tech names. So innovators, you can look at the quantum computing. They got really hot and then were muted after some commentary about how long it will take for quantum computing to kick in. QS, I believe RGTI was also quantum. These are high flying, potentially explosive movers. They may be the next, Palantir kind of tier. So when you look at like Palantir over the long haul, this was a stock that was trading 25 and now is trading 75. Post-election started rallying pretty aggressively. But I honestly also think that the tech advancement for, Bitcoin related names, and I'll just pull up IBIT again here as a proxy for Bitcoin rather than switching to bar chart. If Bitcoin does continue to firm, and that's a big policy agenda item for a lot of people here and a lot of focal point. If Bitcoin can get back up towards $102,000 a coin, and I will pull up bar chart just so you can see the real numbers. Back over 100K, really over 102K. I think Bitcoin is certainly a sector. Cryptocurrency is certainly a sector that's got a lot of excitement to it, and should be a benefactor of the policies for a longer term hold. And timing may be primed up right now with Bitcoin pressing those highs. A couple of others that have been kind of starting up, just to note here, Rumble, we've looked at before. So their video sharing and cloud services, they had a huge spike and then a fall. This can be setting up something here for a move back towards 14. There are a handful of names with some early indications of spiked interest, and they haven't fully washed out their moves yet. The next move may take a little bit longer, but I think that where you're seeing some of those biggest advancements are going to be MSTR. It's tripled in less than 6 months. Quantum, and then quantum computing and AI. So AI, C3 AI, they have a partnership with Microsoft. Path is a little bit of a smaller name. It's one that I've traded before, and I may look to trade it again. If we get above the 200-day moving average, this may be starting up a new interesting bull trend. We do have the MACD crossover right now. earnings are not for a while. Maybe it needs earnings to get that next real boost, but that's where I think of on my sector for a little bit riskier names. But at the same point, if we're going to see tech growth, I like crypto and artificial intelligence as a focal point, as well as quantum computing. So definitely stuff to watch. Of course, everybody's favorite, IONQ. We've got a big discount to what it was a couple weeks ago. But again, this was a stock that was trading $7, $8, and it's now 37. So if you're willing to take some heat, if it does retest 27, that's a 25% fall, nearly 25% or more than 25% fall for the risk side of things. But the reward is certainly there. If we retest highs, that's $17 of upside. And of course, it's got 25% today already, but it's another name that people really have been talking up a lot as a good potential long-term company. Quantum computing once again. So, this quantum computing stuff got the brakes put on it with the commentary from the NVIDIA CEO, and I believe Zuckerberg had some negative comments about it, but that's sort of natural, right? They're going to talk about how things that they're not necessarily the leader on may not, render their technology obsolete, so that they can kind of prop themselves back up. So I don't necessarily, I kind of take that with a grain of salt. I understand their philosophy on it, saying that quantum computing will take a lot of time, but just because it'll take time doesn't mean it won't be a good investment opportunity. And it seems like that's the natural direction we're going overall anyway. So it's just about how much money these companies have to raise in order to get there. It's taken AI a long time to get where we've gotten already. But now we're making a lot of AI advancements in a much faster return profile window. I think the advancements happen faster and faster as it gets more and more implemented and more research into it. So quantum computing definitely a spot for the future that, maybe 5 years from now, we'll all be talking about how we could have bought QS for $5 and kicking ourselves. Or maybe a week from now, we're saying, gosh, I wish I had bought quantum computing in QS for $5.75 as it's then trading, 9 or 10. So if you want that explosive potential, that's where that I think is there for the potential. But it could also just be a lulling, boring, just stay above $5 because there's always, a repeated buyer of these names until it does effectively get a grip on the market and really become a high focal point. So, you could also look at ARC Innovation. So, you want to go just to a basket of it and not get too stock specific. ARC Innovation, this ETF, focuses on innovative technology. Let's see if I can get a component list for ARKK right now. So some bigger names like Tesla, Roku, Coinbase, they're not necessarily getting into the tiny ones, but they've got Palantir. Can look through some of this. Tesla is clearly the biggest holding, Roku right behind it, and Coinbase. And that's another name that could really benefit a lot from Bitcoin prices going higher. Looking into some of the Bitcoin related brokerages, Coinbase, Robinhood gets talked a lot about for that, and they're breaking out to a new high today. So, if you're looking for something kind of in that middle ground, not straight into quantum computing, something a little bit bigger, I think those could be some interesting fields. Although I have to say I'm not a huge advocate for Robinhood on the whole, or Coinbase on the whole, but that's just personal bias. It has nothing to do with the fundamentals of the stock. It's kind of like I don't like Etsy. I don't see the value. It doesn't mean that it won't go up. I just don't see it myself. So I just try to avoid Etsy when it's got bullish signals because I know I have a personal bias against it. So, You said, so to hear my trade thoughts for today are wanting to see how things go throughout the day as long as we don't get a major pullback, and focusing on the earnings for tomorrow. And if we continue to see good earnings tomorrow, then looking more for the directional trades at that point. We got a big move today. It's a great recovery. We're testing a lot of resistance points for SPY and QQQ after a big move. If we continue to push through, yeah, we might maybe looking likely for a continuation. But I think that the better focus for me is going to be to look at Taiwan Semiconductors and UNH for the earnings play. And then after these earnings come through tomorrow, look for those potential trades afterwards. HPE would be probably one of the few differences where if I'm looking to just kind of reallocate, maybe instead of going back to One Oak when I cash out my WMB, maybe I'll go to HPE instead with those February 23 calls that I mentioned before. Which again, these are a little bit over $1, and I think they could go to $2. So if I think this can double over the course of the next month, that's a pretty decent return overall for me. And if tech money flow continues to come in, then that's one name that I'm looking at for that potential breakout. We could look at like Boston Scientific as well, that had that breakout and then the recovery yesterday and now testing the highs. If that pushes to a new high, that could be another outright long call position with an at the money call for February options. That's in the healthcare space. It does have earnings on February 5th, so I would want to be exiting prior to earnings or refocusing prior to earnings. But for 2 or 3 weeks, I could hold that. Yeah, for UNH, I'm looking for a little bit bigger mover than the market is, targeting 500. You can see decent open interest there, and 580. So for a $40 move, I'm looking at a 510, 500, 490 put fly. That right now is 345, 60 cent credit, about a 60 cent outlay for the put fly. 575, 80, 590 puts me right at about 60 cents as well. So about $1.10, $1.20 for the double fly with a target potential return of maximum $10. But realistically, if I got to like $8, that'd be a pretty darn good return. So I have to see that probability being more than about 20%. 15 to 20%. So it's not going to necessarily hit every time, but if I get 10 to 20%, if I can get something that it pays out 15% of the time, and I think that there's at least a 15% probability of 500 being a good support level and target level, and 580 being some resistance and a target level, then I like that sort of setup. I think it's got a positive reward profile for 500, 580 in UNH with that 510, 500, 490 put fly with a 570, 580, 590 call fly. So I think I like that one maybe the best of the butterflies over TSM. And like I said, HPE or maybe BSX if you're looking for an outright bull play. All right. Any others here? We're pressing against 10:30, so I want to give you guys some time to digest some market thoughts, and I'll be on at the close if something comes up in your mind that you want to discuss for the closing bell as well. And I'll kind of update you guys at the close on anything I decided to do today. But yeah, I'm leaning towards UNH. Again, for the earnings play, cashing out of WMB and looking towards OKE, or maybe just moving out of the WMB OKE sector and switching to HPE as a potential breakout sort of play here post earnings. All right, folks, thanks again. See you in, 4.5 hours. So I hope you all have a great trading day. Congratulations to the bulls, particularly the financials. Let's see how the market manages and digests throughout the day, but so far looking like a bull day and a confidence day for the bull.